Jamaica is a highly prospective target area for different kinds of deposits in an island arc terrain.
As probably the most widespread, intensive, and in-depth exploration program that's ever been carried out in this island.
5 or 6 years worth of work into just 2.
No one else has ever done this before. There has been historic work on the island, trending back 150 years.
I think they're getting excited, as we are, so stay tuned.
Hello and welcome to our pitch battle final at our Mines and Money March online event. Last week we had 3 heats and we had 12 contestants. From those 12 contestants, we have 4 worthy finalists. To go and introduce today's final and to go and introduce our investor judges, I'd like to hand you over to our master of ceremonies, Jochen Staiger of Commodity TV. A warm welcome to you, Jochen.
Andrew, thank you very much, and also very warm welcome from my side here from Switzerland to all of you participating here today, and also to our contestants, to our judges. As Andrew said, my name is Jochen Staiger. I'm the chief editor and founder of Commodity TV, and also the CEO and founder of Swiss Resource Capital. It's my honor and pleasure, to MC today this final pitch battle, and it's fantastic because it was planned with 3 companies, but we had an even situation in the last pitch battle, so we have 4 companies today. And as you know it, this is like Shark's Tank or Dragon's Den, but we are much more polite. In German it's Höhle der Löwen. And we want to see 3 minutes of each contestant for a presentation. Afterwards we will have with our professional judges 8 minutes of Q&A. And let me shortly introduce to you for whom we have today as a contestant. First of all, we have Igor Dutina, for corporate development from Atico Mining Corporation. Then we have Roque, the CEO of Cassiar Gold. Then Shirley Anthony, Director Corporate Communications of Maple Gold Mines. And last but not least, Aneel Waraich, the Executive Vice President and Director from Steppe Gold. Then our judges. First of all, we have John Wong, Portfolio Manager from Ruffer LLP. Then we have Clemens Mieth, Associate Vice President of Endeavour Financial. And then, quite new for us, Machin, who is Director at Denham Capital. Then we have Jamie Horvat, the CEO of Oberon Capital. And also here, last but not least, Miranda, Werstiuk, Corporate Development Director of OCIM Precious Metals. As you know how it works, I have my lovely buzzer here, and so this would be the signal, and I would now please Igor from Atico Mining, please make yourself ready, and I would say the floor is yours for 3 minutes.
Thank you very much, Jochen. Hello everyone. Atico Mining, before I get into the presentation, I'd like to draw everybody's attention to our cautionary notes, as I will be making some forward-looking statements during this presentation. Atico Mining was founded by the same group that found Fortuna Silver Mines. This group transformed Fortuna from a $50 million to a $2 billion market cap company at its peak. And somewhere along the way, the group saw a lot of opportunities in the copper and gold space that they wanted to take advantage of. So they decided to start a new vehicle, and that's how Atico was founded. Atico's strategy is to replicate the Fortuna Silver success and their business model, but this time in the copper and gold space. And we think we've taken a great few steps towards this goal with our 2 assets. First, our flagship asset, the El Roble mine. It's a high-grade copper gold VMS that's been in production for over 30 years and continues to generate a very robust free cash flow for the company. Our second asset, the La Plata project in Ecuador, is a near-term production asset that we're currently advancing through feasibility with hopes of achieving production in the near term. Now, diving straight into El Roble, as I mentioned, is in production. On the bottom right-hand side of the slide, you can see what we've done with the operation since we've taken over in late 2013. We've grown copper production over 13.5 times and gold production over 5.5 times. All of this while increasing both safety and environmental standards, raising them to international standards. And what's very interesting about El Roble, on top of all of its success, is that it's surrounded by a very large land package that we believe hosts additional massive sulfide deposits, which would then have this VMS project be a cluster style VMS. And we think we can provide tremendous return for our shareholders with that. So basically, to summarize, El Roble free cash flow financing all of the company's developments in the coming months. Our second project, the La Plata project, also a very high-grade VMS, as you can see in the top left side of the slide, 2 million tons at close to 13 grams per ton equivalent. It's a polymetallic deposit, high-grade gold and copper. We think this project can generate a very additional healthy cash flow for the company. With both projects operating at the same time, we think the company is poised for a very nice re-rating based on where we're trading at today. So, you know, good cash flow, tremendous organic growth potential, and a team that has done it many times before. Thank you.
Jesus Christ, 3 minutes on the spot. Have you trained that before? Fantastic. Thank you. Can you please clear the screen? Yeah, and now 8 minutes Q&A with our judges. And please raise your hand who wants to ask the first question. Oh, Justin was a little bit faster. Sorry.
I beat you to the punch, Miranda. Igor, a very interesting, I think you guys have built a very interesting company. I just had 2 questions for you. One, you're in Colombia and Ecuador, 2 jurisdictions that I would classify as relatively higher risk. You know, how do you guys think about that? And then my other question is, you mentioned that you guys are generating a fair bit of free cash flow. What are your expectations for 2021?
So I'll start with the last question first. Expectations for 2021 is at current prices, our free cash flow should be somewhere in the neighborhood of $18 million US. And then in regards to operating in Colombia, of course, the reputation in the country has been built over the many years being spent in the news about the cartels and so forth. Our experience has been completely different over the past 7 or 8 years that we've been in the country. We've had fairly good experience. It's still a challenging jurisdiction to operate in, but it can for sure be done. There's a number of companies and success stories in the very recent past that have done well in Colombia. So in regards to Ecuador, similar, let's say, landscape. It's an early mining jurisdiction. But, you know, we think that the government is very supportive of mining, and especially in the last few years. And they have executed on almost everything they promised to the mining industry. And you've seen a lot of majors move into the country recently.
Okay, thank you.
Okay, Miranda?
Yeah, just actually a little sort of follow on from Justin's question. Can you comment about your ESG strategy or focus or plan? I mean, you said it's been in operation for over 30 years, but how have you managed community, environment? I mean, that's a critical piece to success, and obviously you've had success and are continuing to have success at El Roble, but can you just comment on that, please?
Absolutely, and that is something we take very seriously. There wasn't enough time to elaborate on the operation, but when we first took this mine over, it was a mine that was run in a very artisanal manner, very subpar standards. We've significantly raised those standards, both on safety and environmental. But also engaging the community. We have retrained almost every employee that we have, and we have pulled back almost all of the expats outside of certain key positions at the mine. So effectively, this is being run by Colombian groups out of the country. And on top of that, we've significantly encouraged entrepreneurship, where we've turned most of the people that have worked directly for the mine into entrepreneurs providing services for the mine, so that they can continue their business long after the operation is gone.
Mhm.
Thank
Thank
you.
you. Jamie?
Sorry, I had to unmute myself there. Just Igor, thinking about growth here at El Roble, you know, for a number of years, you talked about additional exploration, potential for other VMS, potential for growth in that production from, you know, an increased production there. 18 million in cash flow. How do you break down brownfields exploration in mine, continued development, greenfields around that mine, and further exploration for additional VMS in that area versus CapEx and exploration and development and going to Ecuador?
So that's a great question. Thank you for that, Jamie. Basically, the budget for El Roble this year is to drill up to 18,000 meters. Of that 18,000 meters, I think somewhere around 3,000 to 4,000 will be directly at the operation. The rest is going to be regional drilling, looking for other VMS opportunities. In regards to La Plata has a very, I will say, generous budget this year. We plan on investing close to $10 million, and a major portion of that is towards infill drilling and the feasibility work. And we plan to invest somewhere around 2 to 3 million of that towards exploration drilling, looking for more resources near the mine vicinity or mine plan vicinity of La Plata.
Mm-hmm. Clemens? Please unmute.
Sorry, thank you. Just two questions from my side. What's the current mine life left in the Roble mine? And then the second question is, how is the management team split up between running Roble, exploration around Roble, and developing La Plata?
Thank you for the question. So the life of mine is 3.5 years of reserves and potentially another year of indicated and inferred resources. We're, as I mentioned, spending significant amount of cash this year to look for growing that. Up until this year, we've managed to replace most of what we have mined. This is an underground mine that's been ongoing for 30 years. And the goal is to continue moving forward with that. In regards to how we split managing, we have a fairly large team. Most of the operations in Colombia are I'll say self-governed. We have our own exploration team in the country that oversees exploration, and we have a mine operations that's also self-managing down there. And most of the resources are focused right now on advancing La Plata, taking it through a construction decision.
Mm-hmm. Thank you. John Wong, please.
Hey, Igor. Hi, Igor. Just a quick one. I guess I know El Roble reasonably well, La Plata a lot less so. Can you tell me a bit about what you expect to produce, what's the capital requirement, when it's going to be, rough timings, and also if you're awaiting any major permits to get that done? Thanks.
Thank you for the question, John. So La Plata has to go through the main permitting process in Ecuador. The plan right now is to, in parallel with the permitting process, complete the feasibility study by mid-2022. And the plan with that is to take a fully permitted project with the feasibility study and a finance decision to the board, finance package to the board for a decision on construction. The CapEx is going to be fully addressed in the feasibility study, but back of the envelope numbers based on the early PEA that was done in 2019 puts it roughly at around 60 million, 60. And at this time, we were going to stay by that number, but there will be some changes to it as we complete the feasibility study.
Thank you. Clemens, last question.
Are you looking at any hedging to secure some of those cash flows that are going into the development of La Plata?
So the only hedging that we do is on inventory that's built up or while the concentrate is in the provisional sales period. outside of that, we don't hedge our production.
Thank you very much. That was the first Q&A round. Fantastic. Well done. Great presentation. Good questions. And now, please, Marco Roque, CEO of Cassiar Gold. Please, yeah, switch on. And if you have screen sharing, turn it up now, please.
Can you see it?
Yes, perfect. All there, and we can hear you. So if you are ready, we can start.
Perfect. Thank you, Jochen, and hi, everyone. Just want to bring your attention to the cautionary forward-looking statements, which I will be making today. So Cassiar Gold, we are a Canadian gold explorer. Our flagship asset is located in northern BC. It's a very large land package, 56,000 hectares, 100% owned, district-scale orogenic gold system. It's divided in two main areas. We have South Cassiar, the high-grade section, where we have high-grade gold in quartz veins, which are veins that are 20 gram per ton material, 2 to 3 meter thick, and it's going to be the focus of the exploration this year. And also that's South Cassiar. So at North Cassiar, we have bulk tonnage targets, 1 million ounce at a resource of 1 million ounce at 1.43 grams per ton inferred, already identified that is actually open in all directions. This is a flat lying, near surface, most of it less than 100 meters deep, and open in all directions. So as I mentioned, we'll be doing a 15,000 meter drill program this year. 75% of it focusing on the high grade. So a step out along strike, so relatively a high chance of probability, low risk, and 25% of it focusing on continuing to grow our bulk tonnage. We also have a great infrastructure, and we are very, very attractively valued at 18 Canadian dollars per ounce on the ground, so on that 1 million ounces. And this ignores any exploration upside, and that's the 23 million Canadian dollars market cap with 5 million cash in the bank. So just very quickly touching on our biggest asset, which is our team. Just recently, a couple of days ago, Steve Ledwin was appointed as our chairman, the former president and CEO of IAMGOLD. We also have people like Doug Kerwin, David Rees, James Maxwell from Sabina, or Chris Stewart from Kirkland Lake and McEwen as well. And also quite recently, we've added Steve Robertson to our board. He has been previously with Imperial Metals and was quite instrumental in the development of Red Chris, which is just 200 kilometers south from us on the road, and right next to GT Gold, which is just acquired recently. So just to summarize our key value proposition, we are located in a safe mining jurisdiction with a lot of infrastructure. So we tick those boxes. We have highway going across our property, a 300 ton per day mill, 600,000 tons of tailings, mine permits. We have a very, very large land package with a lot of exploration potential that is 100% owned. We are going to be doing a 15,000 meter drill program this year, focused mostly on the high grade, again, 20 gram per ton material. We have a growing bulk tonnage resource, and hopefully we're going to be adding a high grade resource to match this growing bulk tonnage. Just to give you a sense of scale, we have a 15 kilometer long belt that is 10 kilometer wide, and the resource sits on the 1 square kilometer area. So that gives you a sense of upside. And we also have a very healthy insider ownership.
Marco, thank you very much. Those were your 3 minutes. Yeah, please switch off the screen sharing. And now, whoops, wow, Clemens was very fast. Clemens is first, please, the 8 minutes of Q&A.
Sorry, I think it was actually Jamie who was first.
Oh, really? Yeah, it was a bit slow here, but it's okay.
Okay, no, sorry, Jamie. Just quick question. You mentioned you've got 5 million in cash at the moment. What's your current burn rate, and how far does the 5 million get you to the next stage of the asset?
Yeah, so it's going to take us to the end of this year, so into this drill campaign, and then we're going to have to go back to the market.
Jamie?
Okay, couple questions here. Hopefully, a few of them are pretty quick. You mentioned 100% working interest. Just if you can talk about whether there's any overriding royalties on any of the property. And then just a bit on the past production in the property and any historic drilling, and whether you have any information or historic data that you can utilize on that past drilling and how much work was done. And then just arsenic levels in the area, if you can touch on that for me as well. Thanks.
Yeah. So we do have a 2.5% NSR on a very small area where most of the 1 million deposit sits. And again, this deposit is unconstrained, so it's actually open in multiple directions. And we actually already successfully drilled last year. So theoretically, this envelope of non-mineralization already expanded, and we're going to continue to follow up this year. Your second question was about...
Just on the historic drilling and the data, and how much work was done on that.
So yeah, so this is a brownfield project. That's why we have the mill and we have all this infrastructure and all these property access roads and the camp. So this property saw roughly 350,000 ounces of production, and the grade was well north of 15 grams, so between 15 and 25 grams per ton. So very high grade, recoveries of over 95%. We do have a lot of historical drilling. Most of it was focused around just basically the material that was mined, because these mines were operated by small operators. They were just focusing on finding where the vein goes and scooping it out and putting it through the mill. I'm sorry, your third question.
Just on arsenic levels that's in the area as well, and concentration.
Yeah, so we do have some areas of mineralization where we have a little bit of arsenopyrites, but not at concerning levels in any way.
Thank you. John Wong, please.
So, just a quick one on the South Cassiar. So the bit where you got the high grade drilling, perhaps you can give me an indication of what you think it could be, what you've drilled so far, some drill holes just to get a sense of grade. And then secondly, I guess I would be curious to know when we would get some initial resource on that side of the property. Thank you.
Yeah, so we do have historical drill holes on the high grade, and but I think it's more relevant to historical production. I can give you very high grade intercepts. That could be 3 digits, but I don't think that's representative. I think what's representative is the head grade that was going to the mill, and that was 15 to 25 gram per ton material. So that's what we expect to find. The system is the focus of what we have is 10 kilometers long on the high grade section. So that has a long and also 10 kilometer wide. So it has room to host, and these systems are typically stacked. And we only saw 350,000 ounces of production there. So there's a multi-million ounce potential there. We only can prove that by drilling. We already have roughly over 20 veins identified. So we're going to be drilling along strike. But we're also going to be trying to poke a few deeper holes to try to find new mineralized horizons, because these systems tend to be stacked. So we want to find the new veins and continue to expand our exploration potential as well.
Mm-hmm. Thank you.
All right, and briefly on the timing of the resource, briefly, when do you expect something?
Yeah, so we'll see how it goes, how successful we are this year. We actually already have an historical resource on the high grade that is roughly 70,000 ounces, and it's between 18 and 24 grams per ton between the inferred and the indicated category. So we are going to build on that. So it really will depend on how successful our campaign is, and hopefully it's very successful, and we can move right away for a resource updates on that side, and really prove to the market the potential of what we have. But as you can imagine, if we can add, even if it's just 2-3 500,000 ounces at 20 gram per ton, that really has the potential to completely re-rate the company.
Mm-hmm. Thank you. Justin?
Hey, Marco. Quick question for you. What state is that 300 ton per day mill in, and is there an opportunity to add some near-term cash flow to the story by reprocessing tailings or potentially some higher grade mineralization near surface?
Yeah, so it's not in great shape. It was built in '86, last operated in 2007. We do have a strategic optionality because the mill is permitted, and we also have mine permits. And we also have 600,000 tons of tailings that are, ranging between 1 and 1.25 grams per ton, which were the tailings that were being that were left over from the processing of the high grade. So we do have that optionality if we want to monetize the tailings, to start a small scale production. But I think we have an extremely prospective land package, and we're just focusing on this 15-kilometer belt. That's where we have gold showings everywhere, because we have a 56,000 hectare land package, and we have other targets outside this 15-kilometer belt. So I think it's good to have that optionality, but for the time being, we're not pursuing that because we have a small team, and I think that would be a distraction, and we have a much bigger prize to catch, which is proving this multi-million ounce potential, both on the bulk tonnage, open pitable resource, as well as on the high grade.
Understood. Thank you.
Thank you.
Just quick question, Marco. Are there any First Nations groups up there that are impacted? Have you set some agreements in place? Can you just comment on that, please?
No, that's a great question. Yeah, so very quickly, I can see the time. Thank you, Jochen. Yeah, so we have the Kaska Nation there. We have a very positive relationship with them. They were last year inviting us to do some work. We're actually right now discussing an exploration agreement. We're well advanced in that, and we have a very positive relationship. We try to involve them as much as possible in training opportunities, in creating value, creating, basically giving them as much business as we can as well. And we're also doing a lot of environmental work because, number one, that's important to keep that social license to operate, and also because it's the right thing to do, and it's very much the focus these days, and that we want to keep it that way.
Thank you very much. Perfect. Thanks for the presentation. Thanks for the questions. And we like to move on now with Shirley Anthony, Director of Corporate Communications of Maple Gold Mines. Shirley, let me know when you are ready.
Okay.
Good. Then please get started.
Great. Thank you so much, Jochen. It's great to be back. So I'm pleased to share the Maple Gold story again on this platform with some great companies, and it's a pleasure to meet our new panel of judges. So Maple Gold is an advanced Canadian gold exploration company, and here are our competitive advantages. First, we are in Quebec, Canada, a tier 1 mining jurisdiction. Our projects benefit from exceptional infrastructure access and are located in the Abitibi Greenstone Belt, one of the most prolific, stable, and supportive gold producing regions in the world. Second, our largest strategic investor and 50-50 joint venture partner is Agnico Eagle, a tier 1 gold producer. They took a 12% stake in the company last year and are funding the bulk of our exploration programs over the next 4 years. Third, we are backed by management and board with major company experience. Our CEO spent more than a decade at Ivanhoe Mines with Robert Freeland as an executive VP, building value in extremely challenging, lower ranked jurisdictions such as Mongolia. If we can build value there, we can build value in Quebec. 4, we have 2 projects that are virtually royalty-free with enormous upside. The first hosts a major gold resource with significant expansion potential, and the second hosted a past-producing high-grade gold camp operated by Agnico. Fifth, we are a $90 million market cap company with nearly $20 million in cash and $18.25 million in committed joint venture funding. And finally, we are over 55% held by long-term supportive shareholders, and a lot of smart money has come into the story over the last 6 months. So here's a snapshot of our 2 projects, which sit right next to each other. The Douay project has an established mineral resource of roughly 2.8 million ounces at plus 1 gram per ton gold. Resource expansion and new discovery potential are considered excellent across the property, and the joint venture is actively drilling with the goal of building a plus 5 million ounce gold resource. Look for us to publish an updated resource estimate later this year. The second is the Joutel project, which hosted Agnico's Telbal mining camp that was in production from 1974 to 1993. The camp produced over 1 million ounces at 6.5 grams per ton gold when gold prices were between $80 to $360 per ounce. As the saying goes, one of the best places to look for gold is in the shadow of a head frame, as these old mining camps operated in a completely different gold price universe. The joint venture is currently digitizing drill data and building a 3D model of mineralization that was left behind, and exploration will follow with the goal of proving up new compliant high-grade ounces both near surface and below the historical mine workings. So in summary, it's an exciting time to invest in Maple Gold. Agnico's involvement is a major vote of confidence and speaks volumes about the potential for a new 5 to 10 million ounce gold camp to emerge from our collaboration. Thank you, and let's open things up for questions from the judges.
Thank you very much. Perfectly on the spot. Great. If you can clear the screen, please.
Okay.
So that I see everybody. Thank you. So who is first? Whoops, John Wong was the first one.
Hi, Shirley.
Hey, John.
Hi. Just quick question on the JV, the Agnico JV. Can you talk me through a little bit about the terms and yeah, what the structure is? Thank you.
Absolutely. So the joint venture is a 50-50 partnership at the outset. In terms of the terms, they would be contributing $18.25 million in expenditures for exploration over the next 4 years. That's broken down into $4 million in year 1, $4 million in year 2, $5 million in year 3, and $5 million in year 4. As part of that, they also contributed their Joutel project, and in addition to that, we have a 2% net smelter return that we retained for the Douay property that we contributed to the joint venture, and they retain a 2% net smelter return on the Joutel project that they contributed to the joint venture. And also, in addition, they will be contributing their expertise. They have tremendous exploration expertise in that area of the world, and they would also be helping us with any third-party financing should we proceed to the development stage. Excuse me.
Thank you. Then Miranda, please.
Hi, Shirley. Good to see you. So you've got cash in the bank. What's the plan for this year? Can you talk a little bit about that, please?
Sure. So in terms of our exploration budget, that is all funded by Agnico. So for this year, it is going to be just over $4 million. We also plan to do some exploration work on the western portion of our property, where there's quite a few different targets, VMS targets, gold, copper, zinc targets. And so on that portion of the property, Maple and Agnico are jointly funding about $500,000 of exploration, so 50-50 on that portion. But beyond that, there's not much burn for Maple Gold because it's all funded by Agnico.
Great. Next one. Yes, please, Justin.
Shirley, I saw it was on the last slide that was up briefly, but could you just walk us through what your catalysts are for the next 12 months and any plans to put some economics around the Douay deposit?
Got it. So we have, we just finished our drill program in December, so we should see more results coming through from that. We're in the middle, just over halfway through our winter program, which is a planned 10,000 meter drill program. So results should be coming out from that, I would say in April, starting in April, May time. We're also doing 3D digitization work at Joutel. So we should have some results coming from that we would be releasing to the market over the next few weeks. We're very excited about that project because there's been very little information available to the public because it's been held by Agnico since the 1960s. On top of that, we anticipate putting out an updated resource estimate at Douay. There have been previous PEAs done on the Douay project on some zones that were much smaller when the work was done. So we don't currently plan to do much in terms of economic study, just because we want to focus on drilling this project out as quickly as possible and building up as large of a resource as possible. The joint venture, Agnico and Maple, we are both on the same page in terms of what we want to achieve here, which is a 5 to 10 million ounce gold camp. And in order to achieve that, we want to spend as much money as possible to grow the resource before we start to wrap our heads around the economics, just because it could look very different next year or the year after that based on what we find.
Well, that makes a ton of sense. Thank you.
Clemens, you were before Jamie.
Thank you. Just two quick questions from my side. Just circling back to the JV, can you just briefly outline how development decisions and budget sign-offs are done between Agnico and Maple?
Absolutely. So the joint venture
and just the the second question was, how did you arrive at the 20 million in cash that you have at the moment in the bank account?
Got it. So in terms of the way that things are set up with Agnico and Maple, we have a joint venture committee where there are two representatives from both sides. Any decisions that we make would have to be voted on unanimously by both sides. Now, we have a very strong relationship with the Agnico team. We have the same vision. We have the same approach to how we want to drill and how we ultimately would like to move this project forward. So it is on a unanimous decision. There's no tiebreaker. So it's 2-on-2. And so there has to be very, very close collaboration. But it took 2 years for this joint venture to be formed. And so there was a tremendous amount of due diligence, 4 site visits. It almost felt like we were partners already before this whole deal was signed. And it was obviously very important that we could feel that we could truly work together as a united team. So it will have to be, all decisions will have to be based on unanimous decision on both sides. And then the second one was, how did we arrive at the $20 million? So last year, we had raised to $4.75 million in a private placement back in August, where Agnico actually was involved on an anonymous basis. So that brought our cash position up to around $8 million. After that, in conjunction with the announcement of the binding term sheet, Agnico also put in a strategic investment of $6.2 million. So that added to our cash position. And then on the heels of that, we were offered a bought deal financing by BMO Capital Markets, $10 million, which were done at very favorable terms, only an 8% discount to market with no warrants. So that is how we get to our cash position today of roughly $20 million.
Thank you. Jamie.
Hi, Shirley. We're probably running out of time quickly here, and Jochen's gonna hammer the buzzer soon. Just a little bit more on just, I guess it's the JV and the path forward, and you only have one shot at doing a technical study and growing your resource and building that infill resource before you kind of move to PFS and BFS, and it shrinks over time as you convert it into reserves. The 4-year timeline, what's the thinking there? What's the breakdown on the path forward, infill versus further step out and exploration? And when do you think you're going to advance towards the PEA stage?
Got it. Great question. So in terms of how we're structuring our drill programs currently, it's about 50% infill. So, sorry, not infill, step out. So it's 50% step out. So a big focus, of course, is resource expansion. And then outside of that, 30% is roughly infill, where we obviously upgrade the resources from inferred to indicated. And then about 20% would be on regional exploration. So right now there's just an embarrassment of riches in terms of targets in and around the whole property. And so we definitely want to put aside a small portion of our budget to be able to go and target these very, very prospective targets for, discoveries, high grade discoveries. I mean, anything that we hit could be a game changer for us. But ultimately, 75% to 80% of our drilling will be aimed at growing this resource. There's tremendous potential to expand the resource both laterally and at depth. As well as, Joutel is a big one for us. We want to do quite a bit of exploration over there, whereas a lot of historical resources, historical data that we're wrapping our heads around right now. So the market should see some pretty exciting information coming out from that project. But again, I would say over the next 4 years, it would be more towards the end of the 4 years that we'd be looking at doing economic studies. But right now we want to see, I think, yeah.
Sorry for that. I hate to do it, but I have to. Everybody has to be equal here. Thank you very much. Great presentation and also great questions as always. Super. Then we have Aneel Waraich from Steppe Gold. Aneel, are you ready to take off?
I am ready.
Super.
Thank you, Jochen, and thank you, judges. Good to be back. Let me see if I can get this properly here.
Yes, please do so.
I'm going to go to full screen. Hope you can see the screen.
Yes, it's perfect. Thank you.
Excellent. Well, thank you, everyone. We're Steppe Gold. We're listed on the main board of the TSX. We are Mongolia's newest gold producer, gold and silver producer, and one of the world's newest gold producers, bringing production online in April 2020 in a very tough time. In fact, we listed our company in May 2018, and we were the only IPO in 2018 on the main board of the TSX. So in a very tough market, I guess we like challenges. We raised 25 million. We built our first mine in the last 2 years. And at the height of the pandemic, when the country was restricted for travel, we brought production online commercially last April. And over the first 9 months of startup and ramp up in 2020, we produced roughly 35,000 ounces on a gold equivalent basis at about an average all-in cost of $750. We think that cost will track lower down to sub 700 now that we're getting our full stride here out of ramp up and startup mode. We bought this project, our first project. We have 2 projects in the company today, the ATO project and the UK, we'll call it, Udamhundi. The ATO project we purchased from Centerra Gold for 20 million US in 2017. They had spent 30 million US on the project, drilled 67,000 meters, 28,000 meters of trenching. Most importantly, got a fully licensed and permitted for a heap leach, a CIL plant, and flotation circuit. What we did is take a phased approach, build a heap leach first, lower capex, lower risk, establish ourselves as a producer, a taxpayer, a royalty payer in country. Most importantly, generate our own cash flow to fund the growth of our business, both through growing the resource as well as funding our expansion into phase 2, which we're working on a revised bankable feasibility study as we speak, which will come out later this summer. Today, our market cap is about 160 Canadian, with about 40 million in cash. We are a producer, generating our own free cash flow. We have strong endorsement from within the country. We have Mongolian nationals who own a lot of our stock. We have the government, the newly established sovereign fund, making the first ever investment into a mining company into Steppe Gold. So we do have a track record in country, having previously built another company called Hunu Coal for 20 million IPO, $500 million cash sale 18 months later. So we certainly know how to navigate the jurisdiction. In fact, we consider ourselves a Mongolian company listed on the TSX. So our CEO is Mongolian, half our board are Mongolian, 99% of our staff are Mongolian. While building our first mine, we've actually doubled our resource from 1.2 million ounces to 2.45 million ounces. This resource is only down to about 400 meters. So we have significant growth potential both at depth and along strike, and also stepping out. So this will be our first year for actually doing real exploration, stepping out 1, 2, and 5 kilometers, and also exploring this trend here where ATO4 and Mung are on. Our second project is a UK license surrounded by Erdene resources. We'll start drilling in the next few weeks. And I think I'm out of time, but I'll take the judges' questions.
Thank you very much. Perfectly on the spot. Please clear the screen. Thanks, Aneel. And now 8 minutes with our judges. Whoa, Jamie was really fast.
Okay, so I got one joke question for you. Can you pronounce your VP of Exploration, his name?
Angtushin.
And then on a more serious note, after that, Aneel, can you just go a bit more onto the CSR and your involvement, obviously, with being a Mongolian company as you see it and trading on the TSX and training all the individuals and the locals, but just on the government partnership, the Mongolian National Fund, the Sovereign Wealth Fund, is there any other type of net profits interest or anything else that they have in the company other than their holding? And is there ability to convert that into some other type of ownership at the mine level? Or if you could just give us some background on that. Thanks.
Absolutely. So I'll start with the social side. We've always, right from day one, I guess, proactively focused on that. So this is not a requirement for being ESG friendly or any of that things. These are things we do. We want to show the benefit to the whole country. That's the reason we did a main board listing instead of a backdoor RTO. We wanted to highlight Mongolia, that you can do business, you can get the support locally, provincially, and federally. Clearly we have that support. So we've set up scholarship programs. We went around, we're in the Mongolian steppe. There's nobody around. It's 1,400 in a 1,400 square kilometer radius of 3,500 people. We went to all of them with our Mongolian team, telling them what we're going to do, and almost 60% of them who are able to work came and applied for jobs. We set up a meat and dairy co-op locally, a scholarship program, and we sponsor athletes as well. So we certainly give back. We've we've converted unskilled laborers into skilled workforce on site who've been promoted within. So I think we're doing a great job, both highlighting the country and how it is easy to do business if you do things properly, and of course how we can provide a significant benefit to the locals. So 65% of our Mongolian team are come from within the province as well. So hopefully that clears that up. In terms of the ownership of the government, this is something they gave us capital. They gave us $3 million US just over a year ago to show support. They want to grow gold production in country from primary sources. We are the leading company to do so because we're growing to almost 150,000 ounces in just a couple of years. And our plan is to build a much bigger company. So this is capital they actually invested in the company. It can be converted into equity. It's currently in a convertible debenture form. They have no back-in right for ownership on the asset level. They have a 5% government royalty and of course 25% corporate taxes. That's it. So there is no back-end ownership or any of that stuff. So.
Thank you. Justin, you were next.
Hey, Aneel. You mentioned that you guys have 40 million in cash on the balance sheet. Did you use any debt to fund construction of the first phase?
No, we actually used a stream. So Triple Flag Mining Finance, backed by Elliott out of New York. They backed us as a private company back in 2017 to help us buy from Centerra. Actually, we got to use their operational and technical expertise to build this phase one. So there's a stream on the oxides. So this is a phased approach, oxides going into then the sulfides. So on the oxides, they advanced 28 million US to help us build this.
Okay, and then what's the capital for phase two and your expected timing on getting that into production?
Yep. So to get into production, we think it's about 2 years from now. So we'll start the heavy lifting this summer on the back of releasing the DFS numbers. So the final numbers aren't in, but it's somewhere between 100 and 150. I would say it's on the lower end, but I tell everyone to use 150 to be conservative as what that could be the number on the higher end.
And are you funding that with cash flow or do you think you guys
cash flow? So cash on hand, continued cash flow. So the next 2 years we should be able to accumulate on free cash basis about another 40 million US, and we have debt to take advantage of it. So in fact, the central bank sponsored a 10.5 million US debt tranche already from the local banks there. So we received that last fall, sitting in an account, interest rate neutral as part of our package. So we'll probably have to raise 90 million on that 150 million assumption. So another 80 million plug will come in 2 tranches most probably. We'll probably take 40 to 50 between now and the summer. So we're not a company who's going to release a BFS and wait a year to finance it. We're going to be fully funded and go for it right away. So the second tranche will probably come in within 6 to 12 months after the first one because we don't need it all up front. It's about 25 million of capex this year.
Okay, thank you.
Yeah. Who's next? Don't be so shy. Come on. 4 minutes left.
Hi, Aneel. Hi, good to see you too. Quick question. What's the life of mine at ATO right now?
Right now, you have about a 4-year mine life on the oxides.
Okay.
And when we bring the phase 2 online, it should be about a 10-year mine life at 150,000 ounces. So the luxury we have is while the oxides are producing, we're building another mine. If it takes longer, we still have that production, extra years.
Right. Yeah. So you're not pulling off. You're not coming off stream, adding and then restarting. You're just going to have continuous oxide production and then move into stage 2. Okay. Great. Thanks.
Next one. Yes,
hey,
please,
Aneel.
John.
Hey. In terms of just the phase 2, you got a capital, you got your DFS coming up. Are there any impediments out there? Do you need any special permits, or are you all ready to go?
Yeah. So we bought this fully permitted when we bought this from Centerra. The only permit we had which was a major permit, was the cyanide transportation, usage, and storage permit. We received that after we built phase 1, which still continues for phase 2. So the only update is a land usage update or permit, which is ongoing now. So no hurdles. In fact, we've already announced yesterday we're setting the foundation up for the new crushing circuit, and we've actually purchased it already. So yeah, there's no issues to grow.
Okay, thanks.
Super. Next one. What is your biggest challenge by now, Aneel? What would you say? Is it financing? Is it, let's say, I don't think Mongolia, but do you see any influence also from China? Because they love gold?
No. I mean, China's, the strongest trading partner with Mongolia. China and Russia have less of an influence than they did in the last few decades. In fact, Mongolia started its third neighbor policy, where they want to grow relationship with any country but Russia and China. So the US are there, the Indians are there, the Germans are there, the Koreans, the Japanese, Indians. So you're seeing a lot more influence from all these other countries. So there's no real influence, but Chinese are right next door. We can procure equipment faster and cheaper right next door. So for us, it's a benefit having China next door, but there's no major issues. I would say the only right now real issues are COVID, obviously, because you could have delays, but we have a producing mine, so we're okay on procurement or construction, and we can't get any expats in the country, but that's okay because we have a local team. So.
Fantastic. Is it easy to get the money outside then of Mongolia? Let's assume you go into commercial production. We talk about a lot of profit, and you might probably pay also dividends in the future. Is that easy to do?
It is. As of now, there's no capital controls or restrictions, and Centerra had an operating mine for 15 years that produced a boatload of money, and they had no issues. So I don't think we will, given what we're doing and how we're doing things properly.
Okay, super. Thank you very much. That was the buzzer. All right, ladies and gentlemen, and now we go here as we are in the final, of course. We need to see who has won, and please also the other contestants switch on your screens again that we can see you, because now is the big question: to whom goes from the judges the $1 million, unfortunately virtual? So I will start with John Wong. Which company you want to give your $1 million virtually, and maybe you can say why.
Thank you. It's a hard call, actually. When I came into this thinking, I probably know who I think will win. And actually, my choice is not what I thought it would be. So the one I'm going for is Cassiar Gold. I like the fact that it's past producing. You got a lot of infrastructure in place. You got high grade, permitted in a good jurisdiction. Market cap really low. So I'm going to take my odds with them.
Okay, super. Thank you very much. Then Clemens Mieth from Endeavour Financial. To whom you want to give your $1 million?
I have to say, John, as well. The contestants are really good. I think there's a strong business case for all 4 participants. And I have to say it's also Cassiar on my list who made the investment for me. Especially I like the infrastructure, past producing. It's a shallow ore body. It's a very low EV per ounce. My initial winner was Steppe Gold, but I think the train has already left the station in the valuation. So I see more valuation uplift on Cassiar.
Okay, super. Thank you, Clemens. Then Justin Machin from Denham Capital. To whom will you give your donation?
So I'm actually gonna deviate for the rest of the group, and I never would have thought that I would find myself saying that I wanted to invest $1 million in Mongolia. But Aneel, I was very impressed with the pitch. I think that Steppe Gold seems to be a very attractive story. I mean, you got low capex organic growth. You guys seem to be great stewards of kind of your of the Mongolian community, and you guys seem to be doing a really great job in country. And then I was happy to hear that there's no issues around getting capital out of the country, and you got a clean balance sheet. So I thought really interesting story, and I like it.
Okay, super, Justin. Thank you very much. Then Jamie Horvat from Oberon Capital.
I'm going to side with the first 2 judges there. I'm going to make my pick Cassiar Gold as well. You know, you have this asset with limited exploration that has past production that is high grade, you know, plus 15 grams per ton head grade, high recoveries, 95% recoveries. I assume, you know, we didn't get into it, a good portion of that's gravity gold that's going to come out of there as well. Limited arsenic so far in the area, really great infrastructure, really good community social relations. It's an area where the First Nations are well versed in mining and well versed in exploration and those partnerships. Success in the area with GT Gold and a few others as well. And then real option value on the long term. You know, you have that old mill sitting there, but the real option value potentially of the tailings and reprocessing the tailings down the road. And then, you know, as John and you know has mentioned, it's hard to find a 22 million market cap company that's in the exploration stage in this market right now, you know, trading at that valuation with the upside potential that you have. So I'm going to go with Cassiar as well.
Thank you very much. And Miranda, last but not least, to whom you want to do your money.
Well, thank you all for your excellent presentations, and it has been quite difficult as we've gone through here. With my $1 million, I would have to side with Cassiar Gold. I was impressed. Good jurisdiction, permits, high grade resource potential. I think there's a lot of opportunity, and as John and Clemens and Jamie pointed out, I mean, the valuation is right for investment. From our perspective, how we invest, the family office, the optionality and the potential for that tailings reprocessing is very interesting. So I would put my money to Cassiar Gold.
Okay, super, Miranda. Thank you very much. And we have, of course, a very clear winner out of that. And this is Marco Roque, CEO of Cassiar Gold, with 4 votes. And Aneel, you got 1 vote at least. So congratulations to Marco. And you are the lucky winner here. I must say, I make it very easy. I invest in each company 250,000 and I never miss out something. Very simple on that. So thank you very much, really. And well done. Great presentations. And you were really very worthy candidates for this final. I think it was a great pitch battle, and for all of us, we have learned a lot on your companies. Also, thank you very much on the judges. Fantastic questions, and everybody was well in time and well behaved. I love that. This is really perfect and it makes my job much easier. And I wish you, of course, all the best. Stay healthy. That's the most important thing. And I hope to see you all soon. Maybe it's possible in London in November. That would be great, but hopefully latest PDAC next year. So take care. Thank you very much. And also for our viewers, thank you very much for joining us at the final of the pitch battle, Mines and Money. And thanks to Andrew Thaig and the whole team of Mines and Money, done a fantastic job for last week and this week's presentations and organization. All the best and bye-bye from Switzerland.
Thank you.
Bye-bye.
Thanks, everybody.